Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Thursday, the EURUSD pair continued its upward movement and consolidated above the 38% corrective level at 1718. Thus, the rise of the European currency may continue today toward the next Fibonacci level at 23%, 1.1795. A consolidation of the price below 1718 will work in favor of the US dollar and trigger a decline toward the support level of 1645. The wave structure on the hourly chart remains simple and clear. The most recent completed downward wave did not break the low of the previous wave, while the most recent upward wave, still forming, broke the previous high. Therefore, trend has officially turned to bullish. It can hardly be called strong, but in recent days the bulls have revived and resumed active pressure. The Fed's monetary policy easing supports further growth of the euro, and the ECB will not create any problems for the euro in the near term. On the 4-hour chart, the pair consolidated above the resistance zone of 1.1645, 1680. Thus, the upward movement may continue toward the next Fibonacci level at 0%, 1.1829. A consolidation of the price below 1649-1680 will again work in favor of the US currency and lead to a decline toward the 38% corrective level at 1.1538. No emergent divergences are observed today on any indicator. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 70 pips and characterized as medium modest. On Friday, December 12, we expect the pair to move within the range limited by the levels 1.3356 and 34.96. The higher linear regression channel points downward, but is solely due to a technical correction on higher timeframes. The CCR technical indicator has entered the oversold area 6 times in recent months and has formed several bullish divergences, suggesting a potential resumption of the upward trend. Last week, the indicator visited the overbought area, and 2 days ago, it formed another bullish divergence, while today it has entered the overbought area again. A downward pullback should not be strong. The GBPUSD currency pair is attempting to resume its upward trend in 2025, and its long-term prospects remain unchanged. Donald Trump's policies will continue to exert pressure on the dollar, so we do not expect the US currency to appreciate. As a result, long positions with targets at 1.3489 and 35.50 remain relevant now for the near term, while the price is above the moving average line. It's a sign line on the graphic. If the price is below the moving average, small shorts positions can be considered with targets at 1.3245 and 31.84, only on technical grounds. Occasionally, the US currency shows corrections on a global scale. But for the trend-based strengthening, it needs signs of the end of the trade war or other global positive factors. That's all for today. See you online soon.